Hey traders, so just a quick sharing here. What have I changed, or to be specific, my trading style changes over the past nearly 7 years of trading. So if you don't know who I am, I'm Neo. I've been trading for the past 7 years. No get rich quick scheme here. I started from zero. I was working part-time as a student when I first started trading, and I then studied in Australia, and I took on multiple jobs every single day, saved up the money, blow all of my money, repeat the cycle again until I eventually realized that I need to put money on education. But just to find out that majority of the education were useless back 6 7 years ago, I then started to do my own trial and error. Took me a lot of time. So when I first started trading, I was heavily focused on trading the 5 to 15 M, 5 minute chart, 15-minute chart, mainly just day trading pound dollar. So pound dollar was my go-to pair, and in fact, it was the only pair on my watch list at that time. So how would I trade? I would hunt a lot of min reversion or reversal setups, catching turning point with tight stop loss. So if you're wondering, does that kind of stop loss, that kind of trading style, that kind of system profitable? It was indeed very profitable. So when I first started trading, I lost a lot of money. Every single time, just to run you through my entire story, I would put in 2 3,000 Aussie dollar and I'll lose all of them, and I go back to work, save money from my full-time job, part-time job. I'll then have another $2 3,000 salary, or throw back into trading again, blow all of them again. There are times where I got lucky, make a bit of money, flip 2 3K into 6 7K, and I still eventually lose all of them. So it was until then, I remember it was during my 6th, 7th, or 8th months in my journey, I realized that if I keep doing this, I just cannot seem to escape the loophole, the cycle of just swinging my emotion to the highs, to the lows, constantly blowing up accounts after accounts. Even if I make some money, I would never ever withdraw the money. Why? Because I just want to flip the account bigger and bigger and bigger. And guess what? It was until a point where I tell myself, hey, I need to stop. I then took a pause from trading, took a break, and I go back to work, and I saved up about 10 or 12,000 dollar Aussie dollar. I was living in Sydney. I then started to put in more funds into my trading account, and I still lose some of them, but I eventually turned a couple $1,000s, to be specific, 4,000 plus dollars into 120K plus. So this is not a fresh story. If you hear this, you feel like it's fake, you may just leave the video. You don't have to watch it. I talk about this story at least 10 or 20 times on my channel, and to all of the people inside my public Telegram channel, my Instagram, or our private trade club, the 1%ers trade club. So it was until then I turned into six figures at that time. So you might be, the biggest question here is, how did I turn 4,000 plus dollars into 120 over $1,000? It was again basically just going very heavy on hunting min reversion or key reversal setups on pound dollar. So I'll have extremely tight stops. I'm saying 5 to 10 pips stop loss, and every single time when price goes into my favor, breaking structure, I'll have a very rigid skill in management technique. Every time when I see a BOS, I'll skill in trail stops, and that's how I flip the account very fast. And until I grow the account into a very decent amount, I then started trading more pairs, because I realized if I were to just trade pound dollar, there are times where I can lose 3-4% in one single trading day, even before New York opened. Why? Because when there's no opportunity presenting itself, I tend to force trade, because I was only trading pound dollar. So I realized, okay, if I were to reduce my trade frequency on pound dollar, but increasing my watch list, having pound yen, mainly all of the dollar pairs, pound dollar, Aussie dollar, euro dollar, dollar CAD, dollar Swiss dollar, yen, pound yen, euro yen, Aussie yen, all of the dollars and the yen pairs. And I realized that trading style fits me better. I then started broadening my watch list, and I take again same or lesser amount of positions, but I somehow make more money. And I won't talk about the entire story. I lost all of the money not because of trading, because of a business investment, a business decision. I lost all of my money, and I eventually have to start from zero again. I then started trading prop firms. I only discovered prop firms in my late second year or early third year. FTMO. Back then, FTMO only have 100k max. Their biggest account size was 100k, and their profit split was 30-70, and every payout cycle is 30 days, and they have a minimum 10 days requirement. So you can imagine how long ago was that. So back then, when I first started trading FTMO, that was how my entire journey grew even higher. So I utilized FTMO to make money. Again, I was very fortunate that my first payout on FTMO, if I was not mistaken, again, it was $17,000. I withdraw the $17,000. I remember I bought an iPhone, and I also allocate most of the money back into my ICMarket live accounts. So it was then I started utilizing both FTMO and my personal account, and everything went a lot faster because the power of reinvesting and the power of compounding. But again, my trading style was still too aggressive. I was always on the 5-minute, 15-minute. I even dropped down onto the 2-minute to spot entry trigger, and just to find that most of them are false. Most of them are pure distraction. So it was then right until today. Because I always receive this question, they say, Neo, you trade so little nowadays. What do you do during your free time? What do you do when there's no high quality setup appearing? I tell them, at the very beginning of your journey, you always have a higher trade frequency. And that's a common retail mindset. We want to trade more to make more. But until nowadays, until today, when you have a larger amount of capital, do you still need, realistically, do you really still need to stay in front of your computer every London or New York session? No. My trading style right now is a lot more easy, a lot more simple, and in fact, this is what I teach all of our Trade Club traders as well. So, I personally still prefer you having a solid grading system. Obviously, having a strategy is a must, and then have a trading system that is so simple that even if you're not in front of your computer, you can be notified very easily where's the exact price level, has it triggered your entry, how do you place your stop loss, everything through limit order. Right now, I can say my entire system is all just pure limit order and a lot of alerts. Every single time when I see a high quality opportunity, I'll put on a lot of alerts at my entry and my first TP zone to ensure that I'm always being notified when even if I'm not in front of my computer. And the second most important thing is, I know a lot of you or many of you are trading a more complicated system like ICT, SMC, or anything that is more complicated, everything that requires you to keep staring in front of the computer, everything that requires you to have a lot of subjectivity. That is what I call an overly complicated system. Most of them are again yielding a negative expectancy in the long run. You can only become profitable when you have, especially as a manual trader, as a price action trader, as a discretionary trader, you need to have a trading system that allows you to go hands-free as well. Hands-free doesn't mean you don't need to do anything, but at least when you're trading price action, every single day, every single time when you take a position, they have to be based on the same logic, the same principle, the same rules. And that's the difficult part as a price action trader. You might find yourself, hey, sometimes I draw my SNR zone a little bit different. Sometimes I enter based on this. Sometimes I impulsively enter a trade. So how can I do? Again, have rule-based system, but based on price action. So what I do is very simple. I have a few key strategy. Let's say as simple as a break and retest. break and retest, we will know how to identify what's the actual range, what's the breakout range. Is it a proper BNR setup? Is it an A plus BNR or is it low quality BNR? Where's my price position? Is this breaking out of a key level or minor level? We will then start measuring our RR. If everything ticks off, we will then put in our limit order, set on alerts, walk away. That's it. So nowadays, I trade less and less and less. This is a question that I receive a lot as well. I trade very little nowadays. My trade frequency normally falls between 2 to 3 trades a week. But for the entire April, market has been choppy. So let me just show all of you here. If you look at the chart here, if you look at, let's say dollar CAD. If we look at dollar CAD on the 16-hour, for the past 1 week plus, everything's just ranging. So I have a very strong filter that tells me when should I not trade, when should I trade. And it all follows by a very rigid price position assessment. Price position means where is my entry in comparative to the following resistance or the following support, and how many RR can I potentially get out of the trade. So yeah, have a trading system that is very simple, that basically allows you to just use limit order to settle them. This is how you can scale up, because scaling up your capital does not mean you need to trade more. This is a very common misconception by majority of retail traders. You don't trade more just because you want to make more money. You scale up your capital. You learn how to hold on to your winner. You learn how to only take the A plus setup, have a rigid grading system. That's how you become a profitable trader. Let me write it down for all of you. First thing, you have a grading system. Scale up. Sorry, I'm still recovering from COVID-19. Have a grading system, scale up your capital, and grading system, scale up your capital, mastering price position, and etc. These are some of the key things that really allow you to scale capital. And one most important thing, I hope you all actually see this way. Okay, and the fourth one is hold winners. Holding onto winner is one key thing that allows me to grow my capital. Every single trader that I teach, every single of you watching my YouTube channel, you always know I talk about one thing. Learn how to distinguish what's a good win, what's a good trade. Hold on to them. Tighten your teeth. Don't let go of them. Because every A plus setup means they are your price position or your entry price is located at a key level, and it doesn't appear very often. I'll just give you one example. So one of the very good example will be one of our trader. He took long on gold. He took long here at 29.73, and he held this all the way through. So let me see if I can find it. Let me see. So yep, here you go, found the exact message. So if you look at my Telegram here, you can actually see that, you see one of our trader, his name is Kang, he's from China. He took long on gold at 29.73, and he held it all the way for 1.5 weeks, and he's still holding on to his position. This is what I refer to learn how to scale into a winner. By scaling into a winner, you're essentially stress-free. Why? Because you're using your unrealized P&L to hedge against more potential profit, to bet on more profit. But if you keep increasing your size but remain the same amount of capital, you don't learn how to scale up your capital or learn how to hold on to a winner, you risk more and more and more, and guess what? You eventually blow your account, right? And that's also why at the very beginning of your journey, I would still suggest traders to go for prop firms. Okay, go for prop firms, master your skill set. If you really know what you're doing, you can always extract a large amount of payouts. Again, let me give all of you one example. So if you look at my Telegram again, look at my proud teacher moment. One of our traders who was in $80,000 debt, he secured a 400k FTMO funded accounts. He made 64k, and he is currently, I think, if I'm not wrong, he is currently up about 80 or $90,000 on his second cycle. So there he has made well over $100,000 just from trading prop firms. So the problem is never with your capital, because nowadays it is a lot easier to access to larger capital, either through prop firms, or if you have the skill set, you have the track record, you can also gather investors. So the whole thing here, remember, the best way to increase your profits is to trade less, focus on your grading system, learn how to hold on to winner, and most importantly, scale up your capital. Scale up your capital, use more money, the same amount of risk, because we measure risk by percentage of your capital size. Use same amount of risk to make more money. If let's say you have $5,000, if you continue trading $5,000 for 50 years, you still make the same amount. What do you want to do? Okay, risk 2% of $5,000, risk 10% of $5,000, risk 20%. 5 trades, 5 loss, you're out. Right? So I hope you all really understand what I'm trying to express here, is to really tell all of you that throughout the year, I have 2 kids right now. I have 2 kids. I have a family to take care. I have my parents to take care. I cannot be spending 10, 15, 20 hours a day just day trading or scalping the FX market anymore. I much prefer risking more. My average risk per trade these days is about 40, 50k, 40 to 50,000 US dollar. And I much prefer trading less, because when I trade less, I know the average single setup that I take, they are the highest of the highest quality, and I'm willing to risk more. Trade less, risk more, I still make same or more amount of money, right? So remember, trading more does not solve your problem, does not make you more money. It is about doing the right thing. It's about focusing on what's the highest quality setup. That's why you need to have a grading system. So that's it for the video. If you like it, please don't forget to like, share, and subscribe. If you're looking for a community where you can learn, grow, talk with me directly, learn about trading properly, then consider joining the 1% Trade Club. Remember, most of the people who claiming they are me, whether on Discord or anywhere else, they're not me. Most of them are just scammers. Don't stupidly or innocently give your money to the scammers. So that's it for the video. Talk to you later. Bye bye.